name is Orlando Diaz. I'm the secretary this year for the FAMP State Board. I want to thank our sponsors for coming. First of all, I want to thank you guys for coming over here. I know that it was pretty tough to decide whether we should or shouldn't come, but I'm glad you guys did. I'm presenting today a group that I hold very dear. A little story in 2015 when I was in a bank and I was making my way back to my own shop. I saw an email for a bank statement program for a non-prime lender, and I was like, it's back. It's back. And sure enough, it was from our presenter today, Angel Oak. I personally use them a lot. My rep is here from Miami, Carlos Benacourt. He's phenomenal. These guys are not only good for the market, but they're also trendsetters. Whatever they do, people follow, and everybody's just trying to imitate Angel Oak, in my opinion. So, with further ado, I'm going to introduce John Gemini.
Great job.
I got it. He's the regional VP of sales for Angel Oak, and he's going to be presenting the new non-QM, which is very important because when everything went down a couple months ago, they came back up slowly but surely, and this is a very timely presentation because they're showing us, and those who follow Angel, they're seeing slowly but surely the new products coming out, new ones that just came out this week. Was it this week, the new ones that came out? Yeah, the Portfolio Select that came out this week. And so the fact that they're back in the biz is a good sign for our market. Without further ado, John, please take it over.
Thank you. Good afternoon, everyone. I'm John Gemini with Angel Oak Mortgage Solutions. We already got introduced to Carlos Benacourt out of Miami. Scott Gabell over here. Scott. And then we have a few other account executives that weren't able to make it today. We have Stacy Flanagan in the Tampa St. Pete area, Jerry Calderon in Tampa St. Pete, Steve Arnold on the East Coast. Oh, you work with Steve, oh great. And then Leslie Rudd also out of South Miami. So thank you for everyone for this afternoon. Thank you for coming to the show. It's kind of really good to see people out and about and, who care about this industry. And thank you to FAMP for making everyone feel really safe being here too. So you guys have done a really, really good job. So thank you. So what are we going to cover here today? What does QM mean today? Because it's a little different than it was, say, 6 months ago. I was going to open with a joke. It's like kind of like, I went into this section of my house the other day. I hadn't been there in 6 months. There were shirts, ties, suits. So it feels good to kind of get dressed again. So
don't you have to wear this part up for your Zoom meeting?
We don't do it. So anyway, so what you need to know about non-QM, how we can help you close more of non-QM loans, where you can find non-QM loans, and how to differentiate yourself. So we're going to make sure that you guys learn all of that here today. We've got a small group here today, so let's keep it interactive. Feel free to ask questions anytime during the presentation. So we are a vertically integrated company. So what does that mean to you? We connect Main Street directly with Wall Street. We are one company backed by our hedge fund, which is about $20 billion hedge fund. 16 securitizations totaling $7 billion. 4 this year. The slides need to be updated. You're going to hear me say things today like as of today, because this market is changing and it's changing quickly. As you mentioned, Portfolio Select we rolled out last week. So this says 4 post-COVID securitizations. We've had 2 since then too. So we've had a total of 6 securitizations just since COVID, all AAA rated. In 2019, we're the largest non-QM originator of almost just over $3 billion. And been a market leader since 2013. You got that email in 2015, but we've been originating non-QM loans since 2013. Customer service comes first. You have access to our underwriting. But more importantly, these are the guys on the front lines. They are the most responsible people in the industry. They are the sharpest people in the industry, and they know it. Obviously, you work with Steve firsthand, right?
Except for 5 years.
For 5 years. So.
Yeah. My number 1 choice for non-QM. I'm not just saying that, guys. They're great.
Thank you.
Thank you. intuitive and simple website. We've got some great tools we'll show you. And then again, the local representation, you with Steve, Miami with Carlos, East Coast with what's your name? Scott. Let's talk about the pause, right? That COVID happened, we paused. And one of the things we want to make sure we're clear about, during that pause, it wasn't a credit issue. These loans are still great loans pre-COVID, and they're great loans post-COVID. The pause was just a liquidity issue. You heard, I don't know how many of you were here when Barry lead this morning, right? Everyone, great presentation by Barry. He talked about margin calls. He talked about warehouse lines. That's what caused the pause. So, again, after the pause, we launched on May 1st, and since May 1st, we've had 16 enhancements to our programs. You know, you've seen every week we've been marketing emails that are coming out telling you what's been enhanced. So I just wanted to kind of set the stage on what happened during that pause. So what is alternative lending and what does it mean to you today? Basically, the difference, non-QM differs from QM, satisfy the ability to repay, and restrictions on loan features. Non-QM still has to abide by the ability to repay. We may use alternative ways to document income, but it still has to abide by the ability to repay. The difference between... Sure, absolutely.
Has there been any discussion about repealing the Dodd-Frank or scaling that back? Because I thought there was something coming up there.
I was at maybe you know, maybe more than...
There is. There's talk about not necessarily QM itself, but other loans that may qualify for QM. For example, loans that have been being paid on time for 3 years. They want to include those as loans for QM. So if you go refi them, they'll be considered QM because they have a payment history. Now that hasn't passed. So it just thinks
Would
that they're
that
fine.
be ATR thing?
The ATR is not going to go away.
Right, but I
That's,
mean for that, if you were those people just paying on time.
well, they're going to count the fact that they have been paying for the last 3 years as an ability to repay. Now this is just stuff that's been going around.
Okay.
I don't want to confuse because
So
it's not law.
it's going to, it possibly will change.
Yes, they're having conversations on that as we speak.
Yeah, and there's been that whole QM patch. What's going to happen with that? Is that going to be kicked down the road to this time next year? We don't know. So COVID has kind of thrown a few things into the mix here that I did hear earlier this week about potentially not having a back-end DTI and stuff like that. You know, there's stuff being kicked around. But again, nothing's law. So until we have law, just some of the other things that differentiate QM from non-QM. Caps and fees for 3% versus non-QM 5%, and then the borrower's debt to income. Today it's 43% for you in the QM world. We can go 40 to 40 on the front, 50 on the back. And so here's just a high level of some of the products. We'll get into the details of the products, and again, I really want you to feel free to ask questions at any time. We have bank statement loans, just missed borrowers as Portfolio Select rolled out. We have 24-month seasoning from bankruptcies and foreclosure. You know, our debt service coverage, if you've done business with us, you know it as our investor cash flow program. Life credit event, you know, that's more about Portfolio Select, and some other programs are going to continue to come back. That's why stay in touch with your account executives. Sign up for our weekly newsletter. You'll be the first to know when programs get enhanced. High income, we have an asset qualifier. Foreign national, unfortunately for Carlos, it's not back yet. But you know, somewhere down the road, we see that coming back. So what's the potential for non-QM today? And so to kind of give you an example of what that potential is, let's go back and do a little history lesson here. So you can see here, the blue is non-agency business, and then the orange line is agency business. And you can see obviously back in the early 2000s how the agency business, you know, by far dwarfed the non-agency business. And you can see all the way up to about 2004, agency was still ahead of non-agency business. And then got a little crazy. You know, these were reasonable loans, right? Through 2001 through 2003, what we call reasonable loans. Then it got back to a little bit more reasonable in 2013 when Angelo launched non-QM for the industry. There's still a potential. Look at agency compared to non-agency there. Almost goes back to 1996. If you really look at that chart, I know it's small. And if you guys want a copy of this presentation, we can email this to you afterwards. So what is the potential? Again, talk about how things got crazy. You know, they used to joke if you had a pulse or you could breathe on a mirror, you got a lung, right? And there were 100% CLTVs, right? I closed on my house in 2004 and I got money back at the table. Crazy. 228, 5-year prepayment penalties, you know. Really. And this was the old subprime, right? 580 score, 0% down, no proof of income, no oversight, right? Non-QM today, average score is 680, and probably in the next 3 months that score will get closer to 700 based on the loans we're closing today. We do require down payment. And you heard Barry and Beam this morning talk about skin in the game, about, oh no, these are, you know, bad loans, people aren't going to foreclose on these properties. They all have skin in the game. And the appreciation of real estate, especially here in Florida, you guys, Barry talked about it earlier today, you guys are seeing that great appreciation. So skin in the game, proof of income, ability to repay, and there is oversight and regulation. And it's probably a good thing. So again, the potential, let's take a closer look at this. 2003, 2004, reasonable loans reached almost $300 billion in 2003. It's a lot of business. So you can see non-QM issuance in 2021 is expected to be close to $45 billion. And you can see it was $1 billion in 2016 all the way up to 2019. It was $25 billion. And again, we expect that to be, we took the pause this year, but I expect 2021 to be close to that $50 billion.
Yeah, guys, so really, if you look at this, you look at all the potential you see here in these numbers, the point is pre-pause, right? Pre-pandemic and pre-pause for non-QM. I bet you guys were all super busy doing bank statement loans, debt service ratio loans. It was very common, right? And then we went through that pause and everything kind of quieted back. We're probably, I'd say, 80, 85% back to where we were before with products and programs. A lot of people are not aware of it because everybody got really busy with agency refis, rate turn, etc. But what we're seeing on the front lines and where it impacts you guys day to day is we're getting a ton of activity now, again, on purchases for bank statement loans, self-employed borrowers, people that had some credit issues in the past. They're still out there. And the crazy thing is, we can all attest to it, is the loan amounts have gotten even bigger. It seems a lot of these self-employed borrowers that earn a lot of money are purchasing new homes, moving, purchasing second homes. So the opportunity is still there, really, when you look at these numbers. Pre-pandemic, non-QM was the fastest growing segment in the mortgage industry, and you saw that in every publication you looked at. The potential is still there. It may have even gotten bigger because it was pent up for a little while, and that will definitely impact you guys on your day-to-day operations. You should start to see those loans falling on your desk again. Question?
What's really weird is you're right, we did get, and we are very busy with agency refis and agency purchases in FHA, right?
Mm-hmm.
But what's really weird is pre-pandemic, I seem to have a larger demand. I don't know about anybody else, but I seem to have had a larger demand for this, which is why I say, my guy down there, because I would always have quite a few loans every month for non-QM, and like now nothing.
Right. So the
Where
demand
are the
hasn't.
buyers? I mean,
The demand hasn't gone away. Exactly my point. The buyers are still there. It's just awareness, right? It's starting. The awareness is starting to trickle back out to the realtor community, then down to borrowers that these products and programs are back. And that's really the message we're trying to deliver. Is let you guys know we're back. We're 80-85% back to where we were pre-pandemic in terms of the products and programs. They are there. They are available.
You gotta promote.
I want to throw that.
I'm sorry.
Celia.
Okay,
Yeah.
Celia. And we're gonna.
My name?
Yeah, we're going to talk today about how, when you guys get out of your refi dream, how you can market to those people. Because it's, as Barry said this morning, it's not going to last
Well,
forever.
I'm just wondering where all the self-employed borrowers, why I'm not even getting calls.
I'll answer that. And we've talked about that for the last week or so. And like Barry said, once you turn off the hose for the rates, and the rates go back up, a lot of loan officers because she's too busy
Well,
with
that's
her
not me.
refis. And I get it. I'm like, wow. So can you connect me with somebody? I'm like, absolutely. So the buyers are still there, but it's funny because then the realtors are complaining to us and saying now that they don't need us for now, but they will need us down the road. Talking about you guys. So
Yeah.
I would say if there's anything I would give any free advice unsolicited is don't forget those realtors because you're getting business in spite of you, not because of you, like Barry said. So once your rate goes up even a little bit and this dies out, then you're going to turn around and say, hey, Mr. Realtor, remember me? And they're going to be, well, no thanks, I'm working with Bob down the street. Does he return my calls? So that's all I would say. Don't forget those realtors. So,
We'll talk about, yes, sir.
I just had a quick question on the bank statement problem. We haven't done a ton of business with you. We had close with you in the past. Do you send the bank statements to the accountant to calculate the income at the beginning before it goes into the underwrite to make sure we have the deal? And if so, is it 12 or 24 months?
Yeah, and so we're gonna get into the details of the bank statement, but
Yeah.
let's hold that question, and I'll give you a great scenario that just happened this week about how we calculate that bank statement income for you. So, but great question. We'll get to that, the details of the programs. We are, just so everyone knows, we are going to go into the details of the programs we have today. And again, you're going to hear me say that as of today because things are constantly changing. Good. Why should you care about non-QM, right? And where is it headed? You know, be the standout resource. We talked about it. Carlos just mentioned it. You know, differentiate yourself with your referral source. And your referral source are previous customers. As Barry Reed said, don't be just a loan officer. Be an advisor. Be that confidant that they don't want to go somewhere else. Your bar, again, realtors and borrowers, previous customers, do the loans your competitors don't want to do right now. Because we're going to tell you how they can increase your earnings, save the agency fallout loans. It's residual income. Barry Rabin talked about it earlier today. If you're doing one loan, hopefully it turns into two. The majority of our loans will turn into two loans for you. So you do that, maybe that borrower's had that credit hiccup, right? You close on them right now with the non-QM loan from Angel Oak. 2-3 years, however far that credit incident happened, it's getting further and further in the rearview mirror, you're refining into an agency loan. So look at it as a 2-for-1. As long as you are doing your job to stay in front of that customer and you're that trusted advisor. Strengthen your referrals. You know, we're going to talk a little bit more about that. You know, investor. We have our investor cash flow debt service coverages. You guys hear it a lot. What's it cost you not to do these loans, right? Immediate earnings. Let's face it. You know, you're gonna lose that loan. Bar should be yours for life. Again, if you don't do it, someone else is going to do it, and they're going to get that 2-for-1. Referrals, friends and family. We're going to talk to you more about that referral network. Relationships, again, that big referral partners Carlos talked to, that realtor. We get probably 5 to 10 calls a month from borrowers themselves. I got 3 today. 3 calls from borrowers directly to me because guess what? They've reached out to loan officers and no one's pulled them back, or someone says, I don't think that loan can get done. Guess what we do with that? Turn it back over to you. So again, that loan's going to get done. Those borrowers want to get their loan.
My rep did give me a referral and it closed.
There you go.
He did.
So you got a referral from Angel,
That
close
one
the loan.
that actually closed.
There you go. So thank you. Okay, large underserved market, 50% of the households have less than a 680 score. 33% have less than a 620 score. The self-employed, 36% of the U.S. workers are what we're calling now gig economy. We still call them self-employed workers, right? And that's expected to grow to 57 million by the end of this year. And if you're a tradesperson, plumber, electrician, most people aren't taking calls anymore. They're so busy. Again, so since the credit event, the meltdown in 2007, 2008, 18 million have filed for foreclosure since 2008, 1.5 million just in the last year. There are still things that happen to good people, right? But again, as Barry Stop turning down those loans from self-employed borrowers. This cute little rotation there. You've got jumbo borrowers, you've got credit issues, you've got asset qualification, people with large amounts of assets still want to close a loan, and investment properties. So let's talk about the meat and potatoes, what this gentleman asked a question about earlier, bank statement loans.
So our bank statement program right now is back to 85% loan to value. No MI, of course, and anything over 80%. So to put it in perspective, pre-pandemic, we're at 90, we're at 85 today. And I don't think it'll be too long before we're back at 90, in my opinion. Credit scores start at 660, right? That's pretty much where we were pre-pandemic as well. Loan amounts go up to $3 million. We've always done jumbos on the bank statement program. I always like to kind of, for you guys, think of the analogy of usually the person buying that big expensive property is not your standard W-2 wage earner, right? It's going to be a self-employed borrower that in many cases does not report all of the income to the IRS, as we all know. And that's what this program is designed for. The seasoning for your BK, foreclosure, short sale, etc. is 4 years. Self-employed, the only business owner or 1099 borrower. So you have your business owners, you have your 1099 independent contractors that can all qualify for the bank statement program. Business bank statements or personal bank statements, and we offer the two options, 12 or 24 months. At least 50% of the business owner to use business statements. So you need to own at least 50% of the business in order to use a business bank statement program. 12 or 24 months of statements are available. No tax returns or 4506 required. So getting back to your question, which was kind of the process, right, of what if we offer the 12 or 24, we have both, the business or personal, we have both. What we do for you is we calculate the income for you guys. Obviously, the bank statements can be very intricate and detailed. We're looking at a lot of things. We're looking at where the deposits come from. If it's a business or a personal bank statement account, it's going to be looked at a little bit differently. So we know what to look for, NSFs, etc. We make it as easy as possible for you guys, where really all you have to do is upload the bank statements and the pre-qualification to our website, to our portal, securely comes over to one of your account executives. We will then do the calculation and the math for you, say, look, here's what we can work with on this for this bank statement borrower. I think, John, you had an interesting story
and
about this.
This is perfect. So, again, you're not issuing a pre-approval letter until we have calculated that income for you. We're doing it at the pre-qual stage. We have a team of experts that are just there to calculate the income. And it just literally happened in the last 2 weeks. This was out of Texas, account executive. We looked at this deal about a month ago, and we didn't have personal bank statements available at that time, or maybe just 12 months wasn't available at that time. So we couldn't do their business bank statements based on irregularity of some different deposits. So the loan officer takes it to another non-QM lender, didn't do the calculation for the bank statements up front, got to the closing table, and they pulled the file because they didn't prove the income. Now, the good thing is, loyal to Angel Oak, this gentleman came back to us, we have personal bank statements. We're able to use the personal bank statements, calculate that income for them up front, and close the loan in 2.5 weeks. The realtor on that deal is a Caldwell Banker realtor, one of the largest in North Texas, and this LO shined for not only the realtor but for the borrower. So again, the importance of calculating that income for you up front. You don't have to do a thing. We will calculate that income for you, and that's the income that the underwriter is going to use. So you know up front there's no fuzzy math here. Correct.
I have a question. So when they're 50% owner and we're using business bank statements, is the underwriter only taking 50% of the income to use it for him?
So the question was, if the borrower is 50% owner of the business, will only 50% of the income be used? Yes, that's correct. We're going to give the borrower credit for the percentage of the business that they own. So if they own 70% of the business, we can use 70% of the deposits.
And I'm sorry, I have a couple of
You're great. Keep it coming.
So I've had clients that they have multiple bank statements, like for the business, so 2 businesses, would they be able to use 2 business bank statements?
The question is, if the borrower owns 2 different businesses, right, and they have bank statements for each business, yes, we can look at those. If If the borrower owns two businesses completely independent of each other, and those businesses have obviously their own bank accounts generating income and revenue, yes, we can look at that scenario.
What about when they use their personal and business? Like I have people deposit in their business and then in their personal, and would I be able to use
Yeah,
their
so-
personal?
Right, question was if we can use business and personal together. In that situation, we cannot. We cannot combine a business bank statement program with a personal bank statement program. We would have to look at both, and that's where we come into play, because you can send those statements to us, we can look at them, and we can determine which one makes the most sense in the sense of which one generates the most income for the borrower to use.
One more,
Hey,
sorry.
no, keep them coming,
Wait,
please.
but as in her statement on the personal, you could use the personal if the person gets social security deposited.
Yeah, on the personal bank statements, yeah, we can look at,
Like they have pension.
And
right,
if the co-borrower who's not the self-employed borrower gets a W-2.
that is correct.
You wanna come up to
So,
the
a couple of great,
Give her a mic.
great points, thank you, Sue. Thank you.
No, but I
It's
just
silly,
wanted to
right?
tell you that because,
Yeah, no, I mean, you could,
yes,
Yeah.
you can. So you may have a co-borrower that's retired that's getting social security and pensions.
yeah.
Yeah, so.
You can use that income on their personal bank statement.
Let's talk about that. So yes, if you have a borrower, and it can be, they might own a business, or they might have income from a 1099 coming on their personal bank statements, right? Whichever one we're using, they may collect Social Security in addition. Yes, we can use that income in addition. You may have husband and wife, and one owns a business, and we're using business bank statements for that borrower, generating, calculating the income from there. And then the spouse is a W-2 wage earner. We can use the income from the W-2 wage earner in addition to the income that we've calculated for the bank statements, whether it's business or personal. So there's a lot of flexibility with the program that we can apply to qualify a borrower.
And then what would be the term time? Like once I submit my bank statements, how soon do we know like their income?
The turn time to get the income back on the bank statements, I would say we're sitting about what, 72 hours right now?
72 at the top,
Yeah.
yeah. 72 at the top. But again, we'll get the question. But again, this is all done at the pre-qual stage.
Yes.
So I just want to make sure you get it. I'm sorry.
Yeah, the work is done up front, and it's a benefit to you guys. Because we don't want to waste anybody's time. The last thing you, us, or anybody involved in the transaction wants is the loan to get submitted, an appraisal to be paid for, you get it into underwriting, and then the underwriter starts calculating the income and come to find out there was a bunch of deposits that could not be used. Well, we just wasted everybody's time, we wasted the borrower's 1 year appraisal, now you have to move the loan elsewhere, or it may not qualify at all. We do not want to put anybody in that situation. So that's why we take the time on the front end to do the math, calculate the income. We might go back and forth, we might look at different ways that we have to put it together, need more information from the borrower about their business, etc. But once we come back to you guys with an income calculation from our bank statement review desk, it's an income calculation. It's final. You can go into underwriting with that number. The underwriter will use that number to qualify the loan. You had a question about that?
Yeah, so it's a little bit specific, but for the bank statement program here with sporadic deposits into that account, like if the business owner pays himself only $50,000 every 6 months, would that be a considered factor for calculating that income?
I couldn't hear
Yeah, so I get the tough question.
him.
Thanks.
What did he
Thanks,
say?
So how do we look at irregular deposits or sporadic deposits? Maybe we get some business owners that, let's say in a matter of 1 year, they'll do 3 large deposits. So that's a little challenging. So one of the things Scott said is that we need your help with this. We're pre-underwriting the file up front. What happened with our Texas customer, and I heard a couple scenarios today and yesterday, we do one underwrite, we have one decision maker, which is Angel Oak. What happens to a lot of other, they're great, but some other people, when you send the loan to them, there's 2 underwrites that are done. That initial underwrite, and then they have to go to a second investor, the end investor. So you think you have a clear to close, when you get to the table, they say, wait, I got 5 more steps for you, right? We don't do that. I love that. I mean, and that's something that I didn't understand at the beginning. Why would you do that? But it's something that a lot of people do. It's very common. We don't go through that. So in that scenario, when you have those irregular deposits, I'm going to go back and forth with you, like Scott said. So what's going on? What's the nature of the business? We have a questionnaire that we send out to you guys to help us out with. Fill this out. Do they have a website? how many employees. That's great work for us so that, like you said, once it goes in, I'm not going to call you a week later and say, hey, I have an issue with a deposit or the DTI. Now we're in trouble. So could that be a problem? Yes. Let's think about it like this. Depending on the nature of the business, he's only had 3 deposits, for example, in that 1 year.
It'd be a long shot.
It's a long shot. It's a tough. We want some sort of consistency in the deposits. Again, if this guy's a big developer and he has only 3 projects, but maybe, and I had when somebody say, well, he only worked 3 days out of the year. We know he didn't. That didn't just magically close that 1 day and there it is. So that would be a little bit of a challenge.
But we're gonna do a lot of common sense on this. So that same borrower, you may have only wanted to go 12 months, but let's look at 24 months. And again, it's more common sense stuff. And one of the things I don't want to breeze over what Carlos just said. One of the first slides I showed up there is how we're vertically integrated. We're not going to do an underwrite after you originally got your underwrite or received your underwriting. So that's the key with working for us, and that's what unfortunately happened to that broker in Texas was that they decided to run that past the investor they're going to sell that loan to, and they didn't like that income. So again, everything, can say it enough, everything's going to be done at that pre-call stage. You're not going to issue your borrower a pre-approval letter, put your reputation on the line until these gentlemen have pre-approved it. So
John's line is, my pre-approval to you is my calling card.
yeah,
It's your commission check.
yeah.
If I do a sloppy job, and remember, here's the thing that you have to understand, we take something very seriously in the fact that you're trusting me with your relationship with your realtor and your buyer who's laying out, escrow deposits and all this stuff, and the kids are motivated, we're going to a new school, and we can easily just turn that loan down halfway through the transaction and we can say, I don't know that guy. But who has to face the music? You do. So you're trusting me with your relationship, that buyer's your friend, the realtor's been selling you deals for many, many years. You have to give them the bad news. And I can simply hide behind an email and say, sorry, loan denied. Right? That's something that we take very personal, that, man, I have a lot of commission, I have a lot of people's money in my pre-approval, in my review. So sometimes we will go back and who knows, hey, why does your customer do this? Or give me a little more information, I'm not quite sure. If you go through our first underwrite and we give you the pre-approval, you're I don't want to say cash your commission check just yet, but you're almost halfway there. All right? So help us help you like the same.
Did you have a question? Any other?
I have a question. When the business has multiple accounts, can you use them? Because
So,
our business may have 2 or 3 accounts.
so the question is if there's multiple accounts. So one of the things we're going to look for are transfers coming in from a different account, or maybe going back into that account. So we're going to analyze that account. So people are putting money from account A into account B, and then B is putting it back into account A. That's kind of and you expect us to count that as income? Probably not going to look like that. But if there's 2 accounts, like Scott, the example Scott gave earlier, 2 separate businesses, 2 separate accounts, and there's no commingling of funds.
I had a good deal with a customer that owned it was a dentist. He had 3 offices. Each account had its own Wells Fargo account. It was like their own separate business. This business, there was no commingling of funds. He's done. No problem. It's like a $2 million loan. But if there's money being sent back and forth, because it's like taking $10 and putting it in this pocket and putting it in the purse, you're walking, the same $10 is just going around and around. So.
Any great questions, guys. I really appreciate it. Any other questions regarding bank statements?
Oh, I thought you were.
Did you mention the expense factor?
Yeah.
Expense ratio.
Yeah, so one of the things that helps us determine your income is the expense ratio, right? So we have a business account or we have a personal account. If you're running your business from your personal account, it's your business account, right? So you have your gross deposits, but you also are paying your expenses out of it, right? So how do we determine what net income to give you? That's always $1 million question. How do you know? He's depositing $100. For every $100 that he deposits, how much are we backing out for expenses? That's going to be the part that we again need your assistance. Well, what does your customer do? What line of work are they in? So we're going to assume safely to say that if I have a customer that's a consultant, a business consultant, he's working out of his home with his laptop, and everything that he puts into the business basically is his brain power, right? His talent. Versus a person who is a laborer, maybe they're a plumber, maybe they're a landscaper. That's a lot more expensive on inventory, on gas, on insurance, on all of the expenses. A truck driver, what are those expenses? Versus a realtor. Think about it. You guys versus a truck driver.
Yeah.
Who's going to have more expenses? So that's what we need your help to determine. Okay?
So it's not a flat 50%
Yeah.
because
If
that's
I-
what they changed though.
If I can add to that, we've revamped this process, and in my opinion, we have the easiest process in the non-cap game, because you guys have done business, I'm sure, with a few different non-cap lenders. You know that some require a P&L, some require a letter from the CPA, which the CPA is no longer allowed to write for a lot of different reasons, legal, etc. We've made it super simple. The only thing we need from the CPA is a letter that tells us what percentage of the business the borrower owns, and they do that no problem. It's literally one line. I can verify that Mr. Jones owns 100% of XYZ business. Other than that, we just have a questionnaire that we're going to ask the borrower to complete, and it basically says, Mr. Borrower, tell us a little bit about your business. How many employees do you have? What's your website? What's the nature of your business? What's your expense ratio? And then based on that, we're going to determine which expense ratio to apply. So we've come with a couple, basically 3 different numbers that we use. A 30% expense ratio, meaning you can use 70% of the deposits. A 50% expense ratio, so you can use 50% of the deposits. Or then on the high side, a 70% expense ratio, where you can only use 30% of the deposits. And it's just really common sense based on what the borrower is telling us. A lot of attorneys, doctor's office, web developers, consultants, etc., that operate maybe from home or a small office suite. They don't have any employees. They are the only employer. Maybe they have just one assistant. You're going to be at 30% expense ratio. You use 70% of deposits. It just has to make sense based on what they're telling us. Middle of the tier, at 2 to 5 employees. Maybe they have a small location, brick and mortar. You might be at 50%. Large, huge restaurant, let's take an Olive Garden, for example, where you have a ton of employees and we know runs at high overhead, you're going to be at 70%. So the point is, we're going to take the information the borrower gives us, and we're going to look at it in the business, and that's how we're going to determine the expense factor. But you can pretty much count on those 3 numbers, 30%, 50%, 70% to be your guide.
So it's underwriter discretion on that?
It's not underwriter discretion. This is all done at that pre-qual stage with
That's
Scott, Carlos, whoever your account executive.
Correct?
Yep, it's going to be done.
Do you know what expense ratio is being used and income is being used before we issue a pre-approval to you?
What's the
You're not
floor?
doing up-to-date, year-to-date,
No, sir. We do not need a year-to-date P&L. We don't need
I'm
any.
saying you're doing enough.
Yep. No P&L required. No comfort letter from the CPA. Literally, the only thing we need from an account to the CPA third party is just, I can verify he owns X percentage of this business. That's it. I think we made that pretty easy when you think about how far we've come with bank statement programs.
And if you're using personal bank statements, but they do run, and they also have a business account. If you could show the last 2 months of that business account, we'll allow you to use 100% of the personal bank statement's income.
Got a question in the back?
How are you handling the declining income situation? So, like, obviously right now, some of these folks may be self-employed, their business is stuffed over the last couple of months. How are you looking at that?
Yeah, question is, how are we handling declining income? Great question. Yeah, great question. So we obviously know what COVID did to many different businesses. A restaurant is a great example. In the case of a restaurant, is we're looking to see a recovery in the income. We have our guideline on declining income is 35%. We have our guideline on declining income is 35%, but we're also going to look at the scenario. We may ask to see 24 months bank statements in the scenario of a business, of a restaurant, so we can see a bigger picture of what the income normally was like. And if we see that the deposits are now normalizing post-COVID and back on the incline, we're going to obviously add in the down months to the overall average, but we will move forward with that loan. Yes.
Again, say it 100 times today, we're not going to do that pre-qual until we have either an answer you want to hear or just an answer you may not want to hear. Is that loan may not be doable today.
Can I just ask a question?
above the expense ratio. In other words, what's the lowest expense ratio we're going to use when calculating income? It's going to be 30%.
30.
30.
Okay, it was
So
30.
It was 35. It is now
Oh,
30.
you got better.
That's correct. Yeah. Like I said, we've made it as simple as possible for you guys to do these loans.
And I'm not going to say we're going to give an exception below 30, but if we can get some type of, again,
Justification.
just turn the camera off. No.
Justification.
If we can get some type of justification, but again, it's not going to be issued a pre-qual until that is finalized, right? So when it gets submitted to underwriting, that's the income we're going to use, and not start, haggling over income after you've already written a pre-approval letter and your relationship with that realtor partner of yours is on the line. So, yeah.
Thanks, guys. Great questions.
Yeah, really
on the
good
bank
questions.
statements.
Anything else on bank statements? Oh.
What was the minimum score?
Minimum score for a bank statement program is a 660.
Today. Again, today it's 660.
Changes a lot.
It's changing a lot.
Got one more question back there?
Yeah, so more of a, I guess we go back a couple of slides, I'll show you stats of the percent of self-employed people.
Yeah.
Oh, yeah. It's
Yeah.
a great slide.
And a lot of you in this room are having phenomenal years, right? So a lot of people we'll talk about this a little bit as far as, how to market and how to find these self-employed borrowers. But, and if you want, you can shoot, my email address will be up here at the end of the presentation. You can shoot me an email, I'll forward you a copy of this presentation. If you'd like, we can send that to you.
This is my favorite loan program for many reasons, and one of it is, think about it this way, kind of what we started. How many self-employed people do we have in our markets, right? And those borrowers are buying big homes. So they're not doing stated loans anymore, right? So a lot of these borrowers that you could bring to your realtor to say, hey, I know that some realtors complain that we always just ask for deals. Well, we can pre-qualify a customer that's self-employed, that bought the house 8-10 years ago when everything was, you get a house for free basically. You didn't have to qualify. Now they're sitting on their home, fantastic equity, right? Barry said amazing equity, and they're ready to move up to a triple the value of their home. They're sitting on $400,000 of equity, want to buy a $2 million property. That borrower went to his bank. He usually starts the process there, right? Show the tax returns. You're done. So that borrower maybe contacted an agent to list their home. So when that agent comes and says, hey, John, I want to give you the listing, but I went to two of my lenders and they can't approve me because I'm self-employed. So if that agent isn't working with you guys and they don't know about the bank statement program, that agent is going to lose that listing because I want to give you the listing, John, but if I can't qualify as a buyer, I'm not going to put my house on the market. Because then what am I going to do? Be homeless?
Yeah.
Right? And you're going to sell my house because you're the best realtor in the world, and in 2 weeks, I got to find a place to live. So you know what? Let me have that listing back.
Yeah.
Think about that. Think about that. Just that one little tool that you guys can bring as a value to your agents to really say, yeah, you can work with this guy at this bank, but look at this tool that I have in my toolkit, in my pocket. I'm going to give you this customer who's already pre-approved to buy $1 million property. You get the listing, you get the sale. You're going to double that, and maybe it's your customer that buys it. That's a very nice commission check for you. But if you don't let me pre-approve your customer, you're going to lose him. And if he interviews the next guy down the street, the next realtor who happens to work with me, I'm going to pre-qualify him, and he's going to get the listing. You're not. Guys, it's mind-blowing. It's just logic. Obviously, we're not reinventing the wheel here. And imagine all these big homes you're driving around. How are they buying that? Those aren't FHA. Those aren't FHA, right? I don't think they are. VA. Oh my God. VA. No, it's not. Not in Miami. They get a lot of big homes out there.
Yeah.
DTI is 98%. Well, how does he do that? This is the secret weapon for you guys. Okay, so think about it.
So investor cash flow.
Yeah, sure. My second favorite program, investor cash flow. I want you to think of this program as your investor gold mine program. That's kind of the way I picture it. No income, no employment on the 1003. Okay? So think about that. This is no racial loan. The customer can have 50 properties, 100 properties, 5 properties, maybe it's their first property. There's really no requirement for landlord experience. Okay? The main requirements that we do have is very simple. One, you must own your home. You must be on title, you must have a mortgage. Okay? The reason we say that is because we want to make sure that the borrower is truly intending to use this property as an investment, not intending to occupy. And this is for your protection. I got one of my brokers that understand that. He was pushing back on me and I go, this is for your protection because on the 1003, you're going to say that this is for an investment property. If he moves into that property down the road, you committed occupancy, F-R-A-U-D. Like that word, but that's the truth. And this is the way we kind of help you guys not get into trouble. That's as well. Okay, so this program just wants a couple things. Number one, that the rental cash flow covers the mortgage and gives me a little bit of cushion, about 10% right now. It used to be 1-to-1. Now we're adding
3.8.
right. It's 8.
Yeah.
So now it's 110. So now we need a little bit of cushion. So we want to make sure that that rental property, that my customer's mortgage is $1,000, he's not going to get 700 rental and lose 300 a month. That's suicidal. But if it covers it and it has that cushion that we talked about, you can do up to 5 loans for that same customer, no income and no employment listed on the 1003.
We told we got to move up here. So you can close in an LLC as long as there's no more than 2 individuals on that LLC, and it has to be solely for the purpose of owning and managing real estate. So we've been told we've got to kind of move this along. We have a platinum jumbo program. We'll go up to a 90% LTV. This is a full doc program. You can see the seasoning from bankruptcies and foreclosures up to $3 million. And again, we'll do cash out on all these programs too. Barry talked a little earlier about equity you have in your home. Maybe you want to fix it up, pay off some debt. There's some really good things over there. Asset qualifier, this is for that borrower who has a lot of assets, source and season for 12 months. Maybe they sold a business. Maybe they unfortunately in a divorce a year ago and wants to get back into home ownership. This is a program for them. Portfolio Select is for that credit challenge borrower. Maybe they've had a bankruptcy foreclosure in the last 24, greater than 24, but less than 48. It's a great program for them. That's the borrower you want to get in that purchase. That's your 2-for-1 borrower that you get in that, a credit event is further and further and further in their rearview mirror. That one came out about a week ago. Great program. 2-year. Some of the
One day out.
that's coming, maybe. That's what Scott said earlier. We're at 80-85% of where we were pre-COVID.
Not bad.
Pricing tool. Our website is very easy to use, intuitive. We have a pricing tool. We call it Quick Quote, and you throw in about 7 pieces of information: the LTV you're looking for, the score, housing history, and it'll give you the programs that borrower is eligible for, and it'll give you a rate, the LTV. You might have only requested 80, but guess what? They're eligible for 85. So it'll give you everything you need. It'll give you some high-level parameters, whether it's bankruptcies, foreclosures. This is a snapshot of that, and this is available 24/7. These guys are only available 23/7, so this is available anytime you want. What else we have here? Quick call. That's where you'll update. Scott mentioned earlier, you'll send us our 3.2 file, credit report, bank statements, and we'll do all that work for you. This is where you'll do it on our website. Sorry, we're going to keep moving here. Bank statement review team, we talked about that, solely for the purpose of the pre-qual stage to calculate that income for you. Again, bank statements, the benefit to you guys, we kind of went through that. Chat, we have chat available on our website, so if you're in our portal and you need help, there's chat available directly for you there, not even having to get on the phone. One of the things
I just want to say before I don't go quick, guys, no matter what we say here, our job is to be there for you guys. Just call us. You're not going to remember all this stuff. Jerry, right, Steve, whatever. That's what we're, call Scott, call us. You're not going to remember this. Guidelines will change. Just, if you can't fit alone, call us.
I'm going to take two more seconds. Once you're inside our portal, we have marketing tools for you. The most powerful thing, I'm going to going to go through this. These are just some referral sources for you guys to think about. You all go to a CPA for tax returns, right? Why not ask that CPA, who else do you do business for as far as self-employed people? Maybe refer me some of that business, right? So financial planners, lead providers, you know, show up at that realtor's office with something different than I've got the lowest rates and the best service, right? And the greatest thing about this, having these guys local to you, they will present on your behalf to your referral source. So they'll go out on your behalf. They won't tell you who they are. They're not even with Angel Oak. So when you're presenting to realtors, take Steve with you. Go.
Oh, I did that one.
You've done it once already with Steve Arnold. Okay, great. So it's a powerful presentation. Your realtors are sitting there saying, oh my God, I can get these deals done when everyone else has told me no. So those are really powerful, and these are all the tools available for, guess what, the big cost of free. All available to you. So again, we're not asking you for anything. Just put your name, your contact information, your disclosures there. We have social media posts. Use them. What happens here today is you go back, I'm so busy with my other business. And then as Barry said, those rates are going to start going up. You're going to be like, ooh, what do I do now? So, again, customer centric, I know, it's not John's back. Stay in touch with your local. Stay in touch with your local.
I'm going to ask you guys to do two things. Number one, if you write down our website, it's angeloakms.com. Quick quote. That's the pricing engine. You do not need credentials to access it. Anybody can go on and you can instantly plug in any non-QM scenario and get pricing immediately. You don't need a rate sheet. You don't need to call your rep and, hey, pull out a rate sheet. No, you can put it right there at your fingertips, quickly.
Where's your email?
Right there.
Oh.
And then reach out to your account executive, because if you do want the free marketing, you will need credentials for that.
So guys, send me that email, john.gemini@angelms.com. It's also on our website if you're looking for your AE, their local AE, their email address is on there, my phone number's on there, my email address is on there. Thank you all very much. It's great to see everyone again. Thank you for your support, FAMP. I know we got to